Happy Saturday, everyone. Welcome back to Weekly Options. Welcome back to the channel. It is Saturday, January the 17th, and I figured I'd take this time to kind of look back at my portfolio over the past week to see how it has performed. And as you can see here on the Kinfo website, Kinfo is a site that verifies all of my trades. You can see here that on a rolling 1 month basis, so looking back 30 days, my portfolio is up over $700,000. So that's pretty respectable for the past 30 days of trading. What I'd like to do now, however, is just look back at the last calendar month here. And so starting in January of 2026, looks like my trading has been fairly decent. I'm up $378,000 since the start of 2026, and it looks like this last week here my portfolio is up $157,000. Notable when looking at this calendar is that on the 16th I closed out my first trade for a loss of 2026. So what I'd like to do is just look at the trades I made this week and see how those trades arrived at the P&L for the week and kind of what my rationale was going into each trade. So as we click on my trades here and just pull up the ones from the last week, you can see here that I did some trades in gold. I did a trade in gold where I came out with $64,000 on that trade, and that's a 42.3% gain on that trade. Got a smidge more here in another account for about $5,600. That was kind of nice. And then I also had a very boring trade in J&J that netted me $91,000 on that trade. And then finally, I took a flyer in Apple, which did not work, lost about 10% on that trade, and ended down $20,000. So why don't we look at the gold trade first? So this is the 4-hour chart for gold, GLD, and this is the ETF that trades with gold. And this is a 100-period look-back linear regression channel. And what we can see here is the red line here is the mean, and then the green line up or down is a 1.5 standard deviation above or below the mean, and then the blue lines are about 2 standard deviation moves. And so whenever the chart's going up and to the right, it clearly shows an established trend. What we want to do here is essentially buy low and sell high. So just for a little more granularity, I'll drop down to the 1-hour time frame. And typically when I'm trading, I like to get direction off of the 4-hour time frame, which is this time frame right here. And then to kind of time my entry points a little bit better, I'll look at the 1-hour time frame, or I'm sorry, the 15-minute time frame, which is what this is, or the 1-hour time frame, which is what this is. But we'll just look at the 1-hour time frame here since we're just looking at my entries and exits. So we were trading up here, and then we gapped down on this day. This was Monday, the 29th of December, this candle right here. And when I saw this huge gap down, I immediately recognized it as an opportunity to get in early on a pullback. So on the 29th of December, I started buying the May 2026 calls, okay? And I bought May 2026 calls on Monday the 29th. The trade immediately went positive, and then we drifted back down again, about to break even, but I had confidence in the trade, and so I bought some more calls. And the day I bought these calls, this was Wednesday the 31st, so this is right before the turn of the year. We went into the new year and things traded up, okay? And then right here is when I sold. This is Monday the 12th. And as you can see, price had migrated above the mean. We were now between this 1.5 and 2 standard deviation move above the mean. And that's where I decided, hey, I'm going to go ahead and take my profits. So I took my profits right here. We had this big gap up. We had this little candle here that went up and then closed down in the bottom of that range on that candle. And I decided, you know what? This is my trading style. This is my mechanics. I'm going to go ahead and close the trade right here. I was up 42.3%, and that netted me about 60. Where were we here? Yes, $64,000 on the gold trade. So that's a very nice gold trade, and I'm going to continue to trade gold because I think gold is going higher, and look for pullbacks as an opportunity to get in on the trade. And the key thing with the gold trade is to be very patient on the trade, allow the trade opportunities to come to you. There's a lot of FOMO right now in the market as it pertains to gold, and I just encourage everyone to just not get caught up in the FOMO. The opportunities will present themselves, and to just be patient. And so very happy to net that $64,000 on gold. And not to be picky, but I actually had this other small gold trade here that netted me $5,600. So really it was closer to almost a $70,000 trade on GLD. So that was a nice trade. The next trade I want to talk about is J&J, Johnson & Johnson. I just went to the blue chips for this. The market has not really been providing a lot of opportunity. And, I just, going into this year, I just wanted to be patient. I wanted to trade names that I thought were going to do well, and also trade names that will protect my capital. So not necessarily chasing the biggest gains, but just going with some established names that will just appreciate in price over time, and hopefully I can hit one or two singles along the way. So this is Johnson & Johnson here. Let's just look at the 4-hour time frame first, okay? And as you can see here, looking at the 4-hour time frame, we've been in a nice trend here. We come up to the top, we hit the 1.5 standard deviation range, we kind of trade below, come back up again, come back down. So I noticed this pattern, and right in here, we were getting to the 1.5 to 2 standard deviation range below the mean here, and so I started buying calls. So at this point, just so we can see a little bit better, I'm going to drop down to the 1-hour time frame. And here you go. So this day here, this is January the 6th. This is Tuesday, January the 6th. I started buying the June 26 $190 calls. So I bought some here. We popped up on this candle. I liked this move early, and I bought some more here. This was Wednesday. So I started on Tuesday and I bought some calls. I bought some more calls on Wednesday. We traded sideways and we're just consolidating sideways for a little bit. I liked this price action. It felt to me like we were consolidating sideways for another move higher. So on Friday the 9th, I bought some more calls. And then finally here, we saw this, boom, this move right here. And I bought some more calls on Monday. So I spent that week buying calls on the 6th of January, the 7th of January, the 9th of January, and then again on the Monday, the 12th. And here's where the move started. We just started going up and up and up. And right about here, we hadn't quite hit this 1.5 standard deviation limit, but I was up 45.3% on the trade. And I was just looking at my unrealized gains on that trade. And I just said, holy smoke, I'm up $91,000. The goal is to make money. So I've done that. And I said, you know what? 91K is enough on this trade. Let me close it out here before I get too greedy. And as you can see, we've consolidated sideways. So this was, in retrospect, a good time to exit the trade. And we'll see what J&J does. It might just kind of go sideways for a bit. It might come back down. But I'll be looking at this one again. This was a trade that didn't give me a lot of angst. This wasn't a trade where I was just pinned to the screen, biting my nails, because it's Johnson & Johnson, right? It's been around a long time. And I just kept adding to my position, and I was rewarded to the tune of 45.3%, or $91,000 on that trade. That was very nice. Now, my first losing trade of the year, Apple. Let's take a look at Apple, and let's just see what happened. So again, let's go back to the 4-hour time frame. Apple is something that I think people love to hate, but it's done well over time. So we've trending up here, we hit a top, started coming back down, and I looked at this area here. There was a lot of business that was conducted around this area, and I said, this is probably a nice area here to enter a position. So let's drop down to the 1-hour time frame, and I'll spread this out so we can see it here. And there we go. And so here we were this week, and I saw a nice candle right here. This was Monday the 12th, and I said, is this the right time to be buying Apple? And so I went ahead and got into a position. I thought this was maybe some sideways consolidation here. I purchased the May 26 $235 calls here on the Monday. Not a lot happened with the price action, so on Tuesday I purchased some more. I purchased some more calls here as well on Wednesday. This candle was an interesting candle. It went up, and I think that's what kind of gave me the idea of, hey, this is starting to go somewhere, so I purchased some more calls. And as you can see, we closed back in the bottom of that range, and then just kind of petered down and started rolling over. So I went ahead and sold here. This was Friday. This was yesterday. And I sold for a 10% loss. Now, part of my reason for selling was we're going into a long weekend, and I didn't like how Apple was performing relative to the rest of the index. The index on Friday was largely flat, and Apple was down, and I didn't like that. It seemed to be underperforming, and even after I sold, it rolled over a little bit more. So to protect my capital going into the weekend, I sold. To raise cash in my portfolio, I also sold, and I had less reason to believe in the name, at least in the short term, given its underperformance relative to the index. And that's why I sold that for a loss of $20,000. A blemish, nonetheless, on an otherwise great week of trading. We'll pull the calendar back up here. So we're sitting at $378,000 of profit for the calendar month of January. We've got 2 more trading weeks to go. We have a long weekend. Martin Luther King Day is on the 19th, so no trading on that day. And we'll just see how the rest of the month goes. But I'm going to be focused on precious metals. I'm going to be focused on the big lumbering stocks, the J&Js, the McDonald's, the Cisco's, those types of names. And we'll just kind of see how things go. The market seems a little bit overstretched, and a lot of the opportunities just haven't been there. And the key thing is just to be patient. It's not to swing for the fences every single day, but just wait for the opportunities and just eke out little wins here and there, and they add up. This is a nice, respectable month so far. For the month of January, $378,000. And then, of course, for the rolling 30-day period, I'm up $705,000. We'll just quickly look at the leaderboard. Looks like I'm second on the monthly chart right now at $705,000. We'll look at the rolling yearly chart. Oh, look at that. I'm actually number 1 on the yearly chart at $2 million. So that's not bad. So we'll just kind of continue what we're doing and try to make good trades moving forward. So that's my goal going into next week. Guys, I hope you enjoyed this update today. I hope you have a great weekend, a good long weekend. And make good trades going into next week. So until next time, stay blessed and happy trading.